Welcome back. Earlier this week, the Empire State Manufacturing Index was released. It rates the relative level of general business conditions in New York State. A level above zero indicates better conditions or improving conditions. Below zero indicates worsening conditions. This is where we stand right now against the S&P 500. We're at a level just a little bit above zero. 0.1, I believe, as compared to the S&P 500 shown here in white. Generally speaking, we see as the stock market goes up, and this is a zoomed in look just at the past several months, from September of last year actually. There seems to be somewhat of a positive correlation, although the manufacturing, it looks like it's been weak over the past year or so. Here's a longer term picture of what it looks like. We can clearly see going back to 2021, we saw positive levels at the 40 level, 30 level when the S&P 500 was hitting highs. But since then, we've actually turned negative, and we've been flirting with the negative territory going back to February of last year, 22. Now, notice the divergence. The stock market is really looks like it wants to challenge very recent highs. But the fact of the matter is this level is not following suit. Here's another very interesting chart. Again, the yellow background is the Empire State Manufacturing Index. And the blue line represents a one-year treasury. The 10-year is shown in red. Notice when the inverted bond market occurs, when the blue line crosses above the red line. That occurred again around June, July of last year. That's when this index really started to turn negative. Funny how there's so much correlation, there's so many different connections with the beginning of the inverted bond market, June, July of last year. Now, taking a look at our scoreboard, we spoke about this the other day. It's a new tool that we're really excited to be able to use because it allows us to take a deep dive into the past to see what these numbers look like during different periods of time. All the way on the right-hand side, again, the Empire State Manufacturing Index. And then, just to be clear, it measures the general business conditions, manufacturing obviously, but other areas of the index as well. Now, again, a level above zero indicates improving conditions. Below zero indicates worsening conditions. The July number was just released. That's 1. The prior number was 7. Before that, negative 32. Go back to January of 22. So it started with a negative 1. That was before that we saw a pretty positive streak. 20, 31, 32. All of a sudden, January of 22, and remember that coincides with the beginning of this coincides with the top of the stock markets. Now, from the top of the stock market, we started to go down, and that's when this index really also started to go down. Now, take a look what happened. Now, we had a level of negative 1, positive 3, minus 12, positive 25, kind of holding steady. But then June, July, that's when this really turned negative to a negative 31. That was August of 22. That's the beginning of the inverted bond yield curve. And since that took place, then we've seen levels minus 33, minus 25, minus 32. It seems that the average number has been declining since the beginning of the inverted bond market. Now, compare here on the left-hand side, the Empire State Manufacturing Index in 2006 through 11, compared to the right-hand side of the chart, which is the same index from 2019 through present date. Notice some of the similarities in the pattern. Specifically, we go back to January of 06, and if you recall that period of time, the economy still seemed very rosy. Positive levels of 33, fluctuating 19, 27, 17, 12, 23, in the double digits. Now, all of a sudden, we go to 2000. Let's see over here. This is November 2007. Okay, we had a positive 26. Then 9, 7, negative 7. That was February of '08. We know what happened later on in 2008 with the stock market. That was towards the end of the year. But that was an early warning sign, -7, -15. If nothing else, we see these negative numbers creep up, and then we see a real contraction. Well, take a look at, compare and contrast to what we've seen more recently. We had a positive 43 July of 21, 18, 20, 32. All of a sudden, a -1. That's January of 22. Remember, the top of the stock market that we've seen recent date was -1. -1 is the first negative number we've seen in a long time since that COVID crisis. Well, the -1 coincides with the -7. That's the first negative number we saw in 2008. Well, 2008 happened, not all at once, but it really started to accelerate. So far, we've been flirting with negative territory. Now, we haven't had a capitulation to the downside, but then again, at the depths of the 2008-2009 crisis, we saw levels of -34. Right now, we're at 1, but before that, we were flirting with levels of -32 and -33 before that, January of this year. So, to the extent that we see the depths of the contraction, if you judge the economy solely based on the Empire State Manufacturing Index, things certainly don't look rosy. Now, this is not to imply, again, that tomorrow the stock market is going to do what it did in the past. It's just one of many indicators which we really hope to cover in a great deal of detail. But it's very interesting to go back in history and to see. And we know, certainly on a day-to-day basis, what happened 2007, 2008. Compare that to where we are now. Very interesting to see to the depth of this downturn we've seen. Here's the ranking. And again, the ranking measures over the past 20 months, almost 2 years, what does the index look like? If the index is the highest level it's been in over the past 20 months, then it'll register a 100%. If it's the lowest over the past 20 months, it'll indicate a 0. Well, so far, the one reading we saw today is at the 75 percentile, which means it's actually, relatively speaking, in a pretty positive position. But certainly, we've seen this with a little bit more perspective. It does not look that positive. And this is the monthly change. Little bit of an improvement all the way on the right-hand side, the Empire State Manufacturing Index. That's comparing last month to this month. But certainly, we know taking this into consideration, the long-term trend, things don't look very rosy. So we have a pretty full economic calendar, and we're going to do our best to give all these numbers a little bit more perspective with their historical look at our historical analyzer, so to speak. And we hope that it adds a little bit more context to the numbers that we're looking at. We hope this has been helpful. We look forward to seeing you back soon.